we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Deepak and you're watching IndianOpen. Let's go straight to the headlines at this hour. IT bellwethers Infosys and TCS met estimates in the fourth quarter, with both companies signaling continuation of deal win momentum, but employee costs hurt margins. 1,100 Jet Airways pilots go on strike in protest of unpaid salaries. They will not fly starting 10 a.m. today. Consumer price inflation rose to 2.86% in March, led by a rise in food prices, while industrial production stagnated in February, rising less than 0.1%. And RBI Governor Shaktikanta Das questions why central banks make interest rate changes in units of 25 basis points, along with a monetary policy stance to communicate future actions. He was speaking at the IMF World Bank spring meetings in Washington. And can you imagine what would happen if in one of the future meetings we have the Reserve Bank of India cutting or raising rates by 15 basis points or 40 basis points? That will be really, really interesting, wouldn't it be? Anyways, we'll know about it when we get to know about it. For now, let's take a look at the trade setup for the day. Growth concerns across the world, and that seems to be the order of the day, to be honest. IMF warns policymakers to do no harm as world economy wobbles. They are essentially saying that because of the wobble around the world economy, don't try and act cute. Japan has warned the G20 that the global economy still faces downside risks. So across the world, by and large, you have nations and the authorities talking about how the slowdown might come at hurt. On the other side, of course, there are optimistic views as well. The China data was pretty interesting, and if you look at what Jamie Dimon said post the JP Morgan earnings, and it was a good set of earnings which led to JP Morgan as a stock doing very well too. But he said, and I quote, that if you look at the American economy, the consumer is in good shape, balance sheets are in good shape, people are going back to the workforce, and companies still have plenty of capital. This was after a fairly decent quarter by JP Morgan, which I said led to the stock doing well too. So he expressed optimism, and as I said, the China data seems to suggest that credit growth has surged back, signaling firmer recovery. So at least in that one nation, there are signs of growth actually picking up as opposed to going down. However, what all of this did to the markets? Well, for the world markets, it was a pretty interesting day. The S&P 500 marked these levels, has edged past the very crucial 2900 level. It was psychologically a very important barrier to cross. In Friday's session, the S&P 500 has done that. It is now a stone's throw away from all-time highs. And if earnings in the US markets come out in a stronger fashion, then we may well see the S&P 500 heading to all-time highs as well. Bunch of earnings slated to come out this week. There's IBM, Bank of America, Netflix, PepsiCo, Morgan Stanley, American Express. So it's not just back home in India, in the US as well. It's a very important earnings week, and it could well lead the US markets up to all-time highs. And if that happens, it should augur well for our markets. Just one chart that I want to throw in here before I get to Indian markets. Keep in mind, the world over, the debate is about what's happening to growth stocks versus value stocks. And if you look at the MSCI World Index, the ratio or the difference in valuations between growth and value, wherein growth is priced at a firm footing and value is discounted big time, this is at the lowest level since the dot-com era. Can you imagine the kind of discount that value stocks are trading at across the world, maybe in India as well? And the question mark will be that will that come back in shape? I tell you, if that happens in the world, it could well happen in some parlance in India as well. So do watch out for that particular chart. It's a very interesting chart put out by Bloomberg, and I thought it was important to put out here as to tell you what's happening across the world. What's happening in India? It was a week of some bit of pause to the weekly gains after a number of weeks of gains on a weekly basis. While the markets did well in Friday, the weekly gains were halted. That was one key thing. Also, while autos showed a bit of a rebound, and that was the best performing index the whole of last week, metals have corrected in the week gone by. It may have done okay in Friday's session, but for the week, the metal index has come off. And because of the weakness in the base metals, you might well have the Nifty Metal Index being under pressure today and maybe for the rest of the week as well. Speaking of the week, we'll watch out for results all of this week. The 3 or 4 large names. Wipro would be interesting one also because of the announcements surrounding the results, not just on the results but otherwise too. Tata Steel, and I spoke about how important metals would be. Reliance Industries could well set the trend for what will happen to oil and gas and telecom both. And then of course we'll watch out for HDFC Bank and hope that it delivers what it does usually every quarter. It's very important for the banking numbers to start off on a firm footing this time around because a lot is expected out of the banking stocks. So do watch out for these as well. And do watch out for flows. FIs continue to put in money. In Friday's session too, there was a positive number, 897 crores. It's a truncated week. We just have 3 days of 3 trading days this week. So it'll be important from a weekly perspective as to what the fund flows do in what will arguably be a low volume week. I would presume that until Thursday, we'll not have traders taking very hectic positions because of the 2 holidays that come in between. However, all of this is for the week. What happens to today? What are the stocks that one should watch out for? There are a bunch of them. I've chosen 3 or 4 that I thought were important. Infosys, watch out for this one. The margin guidance was weak. I was reading what Agam wrote in the story that is there on the website, and you can go and read it. But I'll just quickly tell you because I won't dwell too much on this because Agam will anyways come and talk about this in detail. But the margin guidance was weak. Performance was skewed. ADR corrected post the numbers. Remember that. So watch out for Infosys in the session today. TCS, the results were largely in line with consensus. There was maybe a slight miss on margins. Let's see if that has an impact on TCS as well. Jet Airways. Now, 2 important pieces of news to monitor. One, the SBI Cap trustee acquired 5.19% stake in Jet Airways. A lot of people in social media and otherwise, and people who look at the Jet stock very closely, are terming this as a positive for the stock. I don't have an opinion here, but let's wait and watch. It might well turn out in the green today. Let's see what happens here. By the way, remember in Friday's session, the PMO called for an urgent meeting on the review of situation of Jet Airways as well. So important piece to monitor today, what happens to Jet Airways as a stock. And while we watch out for the stocks in news today, it's also important to watch out for the key movers of Friday's session, all of which had news to themselves. Adani Power, big important stock to monitor today. Foods and Inns, a small cap stock, but had a big move in Friday's trade. Let's wait and watch what happens today. And SL Propack, 2 strong days of gains. One issue around corporate governance out of the way. Let's see if there is more in store for this one. However, let's tell you now what's lined up on First Word today. As I always say, it's a collection of the top editorial stories that we believe we should bring to you. Agam Vakil, as I said, will join in, compare and contrast the performance of Infosys and TCS in the March quarter. 6 investors have expressed interest to bid for Jet Airways, even amidst the grounding of planes and pilot strike. Sajid Mangat will get us all the action. Indian steelmakers reported slow production growth in the financial year gone by, but they were operating near full capacity. Nikki Muchandani has the latest figures, and Pallavi Nahata will tell us about the economic concerns raised by the latest CPI and the IIP data. Let's move to the 2 big earnings that came out on Friday evening. Both Infosys and TCS stayed on course in the 4th quarter, meeting estimates. Agam Vakil is here to compare the 2 earnings to find out which of the 2 performed better on 6 parameters. Agam, what did your comparison throw up? Good morning.
Good morning, Neeraj. Well, this quarter, I think it belongs to TCS, probably hands down even. And this is something, again, what we were expecting. So I'm going to start off with revenue and compare the growth of TCS and with Infosys. So as you can see, both have seen growth, which is largely in line with consensus expectations. But TCS perhaps has a little bit of an edge over Infosys, which is why this particular feature can go in favor of TCS. When it comes to operating margins, again, not completely out of expectations, but the drop in both these companies in terms of margins, operating margins, was a little more than what the street was working with. Again, considering the fact that TCS not only has higher margins, but its contraction has been less than half of that of Infosys. Again, this round also goes to TCS, considering Infosys has seen about 120 basis points contraction at around 21.4%. Moving on to, well, your largest vertical, and that is, of course, the financial services vertical. We do know that about 30%, 31 to 32% revenues come from this particular vertical for both these companies. So TCS, of course, is looking at a 2.4% uptick, and thereby seeing the third straight quarter of gains, sequential gains. On the other hand, Infosys is looking at a drop, so some amount of problems there. And this is something, again, a lot of analysts were talking about, because this was a key feature for both these companies. But when it comes to, well, America, North America specifically, their largest market, this is where growth for Infosys has been much better. And this is perhaps the one of the few parameters where Infosys actually scores over TCS with respect to growth. As you can see, 3.8% growth there against TCS of 1.8%. And given that this is the largest geography for Infosys, considering 61% of your revenues come from this particular geography. But moving on, as far as your digital services goes, well, I would say it's fairly evenly poised. Sure, TCS has made about 46% growth on a year-on-year basis against Infosys, but well, one would argue that digital services is actually contributing a little more for Infosys as compared to TCS. So I would say this is fairly evenly poised, and it has always been a draw between the two of them as far as this parameter is concerned over the past few quarters. But perhaps the most important is the outlook, the guidance that we are keeping an eye on. Now, we do know that TCS does not give any guidance out there, but it does suggest that they have a target of 26 to 28% in operating margins. In FY18 and FY19 as well, they had said that these were the targets. They have not been able to meet these targets. Maybe a quarter here and there where we do see that target, that their operating margins move about the 26% mark. But if they haven't, but this target maintained, as they say, this is aspirational for TCS. Infosys, on the other hand, are positive when it comes to its revenue, considering your revenue growth guidance is around 7.5 to 9.5%. Our expectation was, well, say a 7 to 10%, and so it's right in the middle of that. And for operating margins, again, this is something that we have written about at Bloomberg Quint on the expectations of the 100 basis points decline when it comes to its guidance for the upcoming financial year at around 21 to 23%, down from 22 to 24%. So in this case, again, it's fairly mixed. But if you consider all the parameters, well, TCS certainly has done much better in comparison with Infosys for this particular year, for this particular quarter.
Okay. Let's wait and watch what happens. The ADR indicated that there could be some downside pressure on Infosys.
For Infosys, yes.
You would believe that would happen as well. Yeah. Okay, great. Thanks so much for that, Agam. We'll, of course, during the course of the show also tell you what large brokerages have said. But this is a good analysis of what the two big boys did in the quarter gone by. At least 6 investors, including Etihad, have expressed early interest in Jet Airways. That's the next piece on First Word. But the bidding process is happening amidst mounting stress for the airline. Around 1,100 pilots will not fly from today in protest of unpaid salaries. Not that they have many planes left to fly any which ways. Sajid Mangat joins us with the latest. Sajid, what could happen next in this saga?
If you look at the operations part of it, we were told that on Friday that they are operating on 6 to 7 aircraft, and that would be roughly around 40 flights over the weekend. And we are not sure whether this week they would be able to continue with the same kind of operations. From the funding point of view, you have seen Naresh Goyal pledging nearly 27% stake, of which 5% has been now taken over by SBI Caps. That's valued at some 120 or 125 crores, or which has been given to the company. But the question is still there, that is it enough for Jet to take off from here? It seems unlikely, because there is a status quo which is going on with respect to providing securities to the lenders. The lenders had very categorically stated that they will be providing 1,500 crores worth of credit lines, subject to that fact that they get security against it. Now, it seems that security is not coming through. That one of the reasons why Naresh Goyal has pledged his shares is to ensure that there is some kind of security which the airline gets. But that's not enough, because even though his pledged shares worth 800 crores, the operating leverage of Jet is declining day by day, and that does not give enough security to the lenders to give 1500 crores there. So that's going to be a big challenge, because ultimately you have to get the finances and cash flows going to ensure that the security is there. So the price which Jet may be at this point in time, maybe it's a very high price for a company whose operations are almost close to 5 to 10% of its original operations. So the price is not reflecting the exact reality on the ground which is there, and it's just an assumption here that the lenders are going to come in. Lenders will not come in till they get 100% security, or they have a firm bid from around 6 of the bidders who have come in and participated. Now we've seen over the past, especially in Air India, that it's not going to be easy for a bidder to come in easily, because there are too many complications here. You have the debt, you have the lessors, everything comes in place. Now, for existing players to participate, there is going to be a challenge, because it's easier for them to get the slots and add flights rather than take over a company with a debt of nearly over 10,000 crores. It's much more easier for them that way, and when they are getting the slots, I'm being told on the ground, Indigo, Vistara, SpiceJet, all have been given the slots of Jet, and they are going to the lessors and deregistering the Jet planes and converting them into their planes and flying them. That's a much easier way to scale up your operations as opposed to go and buy a company with 10,000 odd crores of the Jet. So unless there is strategic investors who come in, foreign airlines who come in, it's not going to be a thing. And even for foreign investors, the control issue remains that, because the airline has to be controlled by an Indian. So their maximum stake is 49%, but still they will not get a control on the airline.
The news reports that Etihad has expressed interest for 49%.
Even if Etihad expresses interest, it needs an Indian player to control it. So, and Etihad is not going with Jet, or means as per news reports, Naresh Goyal is going alone. His bid, though, came in after the time was over. It's subject to speculation whether it will be accepted by the lenders or not. So it's going to be a tough time for them. And if pilots are saying that they want to go on strike, they can go on strike, but there's no
place to fly
anyways.
That's true. Okay. Great. Sajid, thanks so much for putting this into perspective. It's very difficult to make sense of what will happen to each of these pieces for the next few days or weeks, but it's important to monitor every single time what's happening to Jet Airways, to just give you a lowdown of the near-term implications for the Jet Airways stock price as well. And Sajid Pangat doing that. The next piece on First Word today. Indian steel makers had a good run in the last financial year. Low production in China meant pricing remained stable, and all the players managed to increase plant utilizations as well. Nikki Mirchandan is here for more. Nikki, just what the doctor had ordered for the steel players, I reckon.
Okay, on the face of it, the numbers pretty much are looking flat, and the capacity utilization levels have been up since FY17, but then let's dwell into the numbers and then make sense out of what these numbers mean for the industry as a whole. FY19, if you look at the growth table out there, JSW Steel, Tata Steel, in terms of the production numbers, that's a 1 to 3% growth out there. SAIL has registered a 8% growth out there, but then look at Tata Steel, including Bhushan Steel number, that is a 34% growth on the production front. And SAIL, somehow the numbers look pretty flattish for two steel majors, that is Tata Steel and JSW Steel. SAIL, on the other hand, has clocked decent growth of 5.5%, and Tata Steel, included with Bhushan Steel, again is standing out. It's a 34% growth out there. And in isolation, however, if you just look at the production numbers without the sales picture, you would realize that the numbers are pretty much in sync with what the last year was for JSW Steel. But then there is a contrary trend playing out for Tata Steel and SAIL, where the production growth is the lowest for Tata Steel since FY15, and for SAIL, it's on the other hand highest since FY15. JSW Steel pretty much has produced as much as what we've seen in FY17 and 18. What explains this? If you can also look at the sales number before we could actually get on to the explanation part of it, it's a SAIL flattish number which has been reported by JSW Steel and Tata Steel. SAIL, on the other hand, as I just mentioned, has reported good set of numbers. Now, if you just look on the face of it, these numbers are looking pretty much flattish. But then if if you look at the capacity utilization levels of all the three steel of the players, you would realize that both Tata Steel as well as JSW Steel are working at their optimum capacity utilization levels, something in the range of around 90 to 95 or 98% for Tata Steel. That pretty much explains why the company cannot further go ahead and build on to more growth to the existing utilization levels, and because of the constrained capacity, they are unable to even percolate down on the sales number. So that utilization level is pretty much something that the viewers need to keep in mind while looking at the production and the sales number, because that will give a complete picture of how growth is moving. Having said that, having addressed FY18 as a good year for steel companies, brokerages pretty much remain divided on these numbers. What brokerages particularly have to say is FY18 is a good year for the company, has been a good year for the steel industry as a whole. It's a 6% growth out there, but then going forward, Morgan Stanley feels it's a 6.5% growth coming in for the industry as a whole, a little higher than what has been clocked in based on capex recovery and some pickup in consumption, which is expected to aid the steel demand. But then if you look at the imports level, that is something which is a cause of concern for the industry. If you look at the year-on-year basis, although net imports have come down, but then they still remain an issue for most of the steel players across JSW Steel, Tata Steel and SAIL. All in their Q3 commentaries have respectively said that imports have remained a concern and government should do something about it. In fact, SAIL and JSW Steel in their statement have read that they're concerned of growing imports mainly coming in from FTA countries. MIP is no more there for steel industry, and that is a cause of concern for most of the steel players. FY18 clearly was a good year, even if the numbers look like a washout numbers on the face of it, but then the demand remains strong for the industry as a whole, given the utilization. Yes, FY19.
And it shows in the way the utilization numbers are.
Yes, so 98% kind of utilization levels, something growing on top of those utilization levels is definitely challenging, and that is perhaps the fact that you've seen most of the steel players going ahead and taking that capacity expansion both organically as well as inorganically.
Yeah, happens usually after 85-90%. At 95%, you probably need to do that. Let's see if the demand holds up. In all probability, should. Nikki, thanks so much for putting that into perspective. An increase in food prices caused retail inflation to rise for the second straight month in March, while industrial output stagnated in February, pointing to weakening economic momentum. Isn't this the perfect, potent nightmare for a central bank? Pallavi Nata reports.
The monthly set of economic data points are pointing to slower growth in the economy, even as headline inflation is now starting to rise. Let's start with industrial output data. IIP growth fell to a mere 0.1% in February compared to 1.7% in January. This was lower than the 2% growth forecast by the economists. The slowdown came from the manufacturing sector, where activity contracted. This is in line with signals coming through from other indicators like auto sales and consumer imports. The use-based classification of industrial production shows another sharp fall in capital goods output. This may be partly because of base effect, but also because of slower activity ahead of elections. The consumer goods sentiment is showing modest but positive growth. On to inflation data. Food prices have started to rise, and this is pushing up headline inflation. Inflation rose for the second straight month to 2.86% in March. This was in line with analyst expectations. Two important things to focus on within inflation data. Food inflation turned positive, with CPI food rising 0.3%. There is still a divergence in rural and urban food. Rural food inflation is still negative when urban food inflation has turned positive. We would also like to point out that the month-on-month change in prices of pulses, fruits and vegetables is now positive.
All right, that's of course the IIP and the CPI numbers. Now keep in mind, just my two bits out here, despite food inflation having risen, it's not at levels which could cause concerns for the central bank, and judging by the commentary and the expectations that the central bank had, the belief would be that if at all inflation would come in, if my memory serves me right, it's happening only in Q3 and Q4. The first couple of quarters will not see inflationary pressures. The central focus right now would be on growth, and I think it's come out eminently in the first meeting by Governor Shaktikanta Das, wherein they said that the central bank's focus should not be only on inflation but on growth as well. One would reckon that with what's happening around growth, you would probably not see a hawkish central bank. But it's definitely a dilemma of sorts. Inflation inching up, growth inching down. What does a central bank do, which hitherto has been an inflation targeting central bank, but just lately changed stance of sorts. That's all that we have on First Word today. Lots more lined up on IndianOpen though. We get in Pankaj Murarka to talk about what to do in a scenario like this. Investments that one should monitor. Adani Power has been allowed to rework its tariff agreement with the Gujarat government. We talked to former CERC Chairman Pramod Deo to understand some of the caveats of their order. But after this break, a full tilt towards the day's trade.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
Better?
Same.
Now? Abhi?
I think so.
Sometimes we can't see what's right in front of us. And when it's clear, then the big picture becomes fuzzy.
Perfect.
The right lens always is. Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Neeraj. It's going to be interesting because it's a 3-day working week.
It's a truncated week. I don't know how will traders have the confidence to take large positional trades in a scenario like this, wherein the world markets are also the US markets are stones throw away from all-time highs. So, but don't quite know what will happen in terms of positions being taken. But news flow certainly will be active.
Yeah, probably could expect the volumes to be slightly subdued this trading week. Just got 3 days to trade, holiday on the 17th and the holiday on Friday as well.
Yeah, but it's interesting how autos are bouncing back, metals are still subdued in trade.
And IT is going to be in focus today.
In today's
We're going to see a reaction on Infosys post what its ADR did. But we'll talk about all of that and more with our guests as well. For the time being, let's look at what happened in the futures and options space and how we're set up within the derivative space. Agam Vakil is joining in for that. Agam, good morning.
Oh, good morning. Well, we're looking at mixed trends when it comes to the Nifty and the Bank Nifty futures. What we did see was advance for the Nifty, but unwinding coming through when it comes to its open interest. On the other hand, the Nifty Bank really didn't advance as much. It moved up around about 0.5%, but its open interest has moved up by around 8.3%, indicating buying coming. India Wix continues to remain at 21. It really hasn't moved as much, but it is still at relatively heady levels. So keep an eye on that. Open interest change, we saw unwinding in the 12,000 call, and this was, of course, largely on account of the fact that the Nifty advanced. And we saw writing around the 11,500 put as well. And that's what gives you the open interest distribution of about a 500 points range between the 11,500 put, where maximum open interest is, as is the case for 12,000 call. But, well, the Nifty put call ratio, again on expected lines, rose by as much as 1.5. And we're keeping an eye on, well, a whole host of stocks out there, 6 stocks, in fact, in the F&O band. Diwan Housing Finance, DLF, IDBI Bank, Jet Airways, Reliance Power, and Wockhardt. However, PC Jeweler moves out of the F&O band, so watch out for this one. It did see a 16.5% up move there. And in terms of other stocks, we're watching out for Adani Power. Of course, it will also be in focus on the fact that we have the news from SERC and up 5.5%. Moving on, we also have, well, ITC, another very interesting one, doing well from the FMCG space, up 3%, a lot of longs coming through there. And besides that, we have REC as well. It's been showing some strength of late. And we are also keeping an eye on several other counters like TCS and Infosys, of course, and we wait and watch as to how they react to earnings as we move into trade today.
Yeah, we'll certainly watch out for those. Agam, thanks so much for putting that into perspective. I'll do a discussion on power in a bit as well, but since Agam ended on the topic of IT, and we spoke about IT at length, let's get Avinash Gorakshakar. He's head of research at Joindre Capital, joins us right now on the show. Avinash, good having you. Thanks much for joining in. The Infosys ADR was a bit of a giveaway as to how the street would probably view on for a short term the results of Infosys. How would you view them, Infosys and TCS, and what's your outlook for the near term?
No, I think clearly, Neeraj, what disappointed the street was, the margin and top line guidance. I think that is where probably Infosys could attract a little bit of selling pressure. If you look at TCS, I think margins were down, but the management commentary appeared to be quite healthy. The deal pipeline has been pretty good, and I think the management is looking forward for a much stronger year in the coming year, that is FY20. And although margins may remain a little, down, I think the overall business by virtue of new accounts is definitely going to actually incrementally, increase the top line. So I would believe that TCS definitely looks a shade better as compared to Infosys. And I think probably, the markets would obviously like to know in terms of margins, whether there's any further downside, because looking at the way the rupee is now moving, clearly one could assume that possibly the rupee headwind is not there for most of the IT companies. So clearly TCS scores much better in the in the Q4 numbers, but the management commentary definitely appears to be a shade better than Infosys.
We had a conversation on Friday before Infosys and TCS reported numbers, and the opinion there was that while obviously in the near term both these companies do what they do, but in the slightly more longer term, Infosys revenues is likely to pip over TCS, and from a larger spectrum, it probably will be a standout compared to TCS. Would you agree with that?
No, I think in the longer term, Infosys definitely could do definitely better than TCS, considering the fact that the base effect would play out. And most importantly, I would believe that they are also focusing on the digitization pace. More importantly, assuming that margins remain where they are, where the margin guidance has been put at around 21 to 23%. Assuming that these margins remain at the same level, but obviously if the top line increases and they do get further more contracts, I would believe that yes, Infosys also appears to be pretty well positioned. But here in the near term, I think the margin kind of guidance, which most of the street expectations was slightly higher. So I think to that extent, you could see a slight sell-off in the short term.
I know the other thing is whether people give importance to the current Infosys versus the Infosys of the last 4 or 5 years, in that the current Infosys has reverted back to my mind to the Narayan Murthy Infosys, right, wherein they are conservative. They do not, they believe, I think, in the fund of under-promising and over-delivering. Yeah. And therefore, would the street work with the belief that if Infosys is given this as a guidance, the way it happened in FY19, we could see in FY20 as well that during the course of the year, on the margins and on the delivery, the pickup could happen. I think that's one key question as well that remains to be answered.
Nonetheless, you can't negate the initial reaction that you may see in
today's session for sure. But would that be something that you would work with, Avinash?
I think clearly, Neeraj, going forward, margins are not going to improve not only for Infosys or for TCS. I think the incremental pie, the top line is now going to be a key focus. As we saw in the management commentary of TCS, I think clearly they are very positive on the deal size, on the new deals which have happened. And I think that is going to give a bigger kicker to the overall profitability. Yes, margins could remain under a pressure maybe for the next 1 or 2 quarters. Hopefully, if the rupee hardens, then the margin expansion could possibly be a little halted for the near term.
Okay, the other one is going to be Adani Power with the CERC order Gujarat government taking into consideration all of the high power committee's recommendations, this is going to be a really big boost for Adani Power? We saw the reaction in the fag end of Friday's trade.
No, I think it will definitely help in improving their margins, and I think this was a long-standing expectation. Our sense is that numbers would possibly improve in the coming financial year, and I think clearly this is definitely going to improve the overall yields as well as the operating margin. And I think clearly, despite the fact that it is a long-term gestation business, in the near term, I think the stock has reacted positively, and we may see the stock going up, in the near term, hopefully, and assuming that possibly now these price increases, what CRC has mentioned, could possibly percolate down to the bottom line.
Okay, but I've just wondered, Avinash, if we assume that this will be a precedent for some of the other power cases, then this would be a big positive, right? Otherwise, this solves what, 1 gigawatt of their overall capacity.
Yeah.
The others are still under a cloud.
Yeah.
Has the stock done enough to bake the benefits of this announcement in?
I think clearly, Neeraj, this is a highly speculative stock, and I think this news flow was anticipated, but I don't think the entire news flow has been, discounted in the price. And as far as the other players are concerned, I think clearly, these are events which are going to be driven by government policy. So until and unless we get some clarity, I think there are expectations that possibly the other power producers also could possibly be in the line to get these kind of benefits. So I think overall, yes, I think it seems to be quite positive. Hopefully, if these kind of news flows continue to happen across the power sector.
Okay, Avinash, stay on. So much more to talk about. We'll get in our research team members now to talk about the other key stocks in news as well. Also, watch out for some key movers in the session today. There'll be a lot of mid-sized names which will take over the rally from Friday's session as well. So that is something you need to monitor. Mishika and Soumit are here for the research news. Mishika, let's start off with you, the stocks in news first.
Yes, so the first stock we're talking about is Adani Power and what they have to say on the CERC order. The amendments are related to PPAs for 2 bids for 2,000 megawatts signed between Gujarat Urja Vikas Nigam and Adani Power. There has been an increase in power generation capacities by approximately 434 megawatts for 2 bids, and the amendments will result in a discount of 0.2 rupees per unit in fixed capacity charge under the respective PPAs. Lakshmi Vilas Bank's board defers discussion on raising capital via additional Tier 1 bonds but approves allotment of 1.68 crore shares. CARE revises ratings on certain Lakshmi Vilas Bank's bonds downwards to credit watch with negative implications. Dixon Technologies acquires 50% stake in Paget Electronics for 27 crore rupees. The target company is into manufacturing of mobile phones, and the company says that this acquisition is a strategic investment decision, and the company plans to accelerate growth in this business segment. Then we have APL Apollo Tubes. They are to acquire production unit of Shankara Building Products arm in Hyderabad. The plant has a production of 2 lakh tons per annum for steel and pipes, and the cost of acquisition is around 70 crore rupees. Shares and warrants worth 97 crore rupees have been allotted to the promoter APL Infrastructure. Dr. Reddy Laboratories has entered into a definitive agreement to acquire a portfolio of 42 approved non-marketed abbreviated new drug applications in the US. The portfolio includes more than 30 generic injectable products, and the value of total addressable market for these products in the US is approximately $645 million for the year 2018. And lastly, let's have a look at the Q4 results of GTPL Hathway year on year. The revenues are up 14.9% at 322 crores versus 281 crores. Net loss is at 28 crores versus net profit at 14 crores. EBITDA is up 5% at 77 crores, and margins are at 24% versus 26%. There was an exceptional loss of 65 crore rupees due to impairment of receivables because of a new regulatory framework by TRAI, and other income is up 3.6 times at 26 crores versus 7 crores.
Okay, we'll watch out for these names. GPTL Hathway as well, results boy. Soumit, what about the brokerages? A couple of mid-sized names.
Well, yes, the first one is on Fortis, where Goldman Sachs has reinstated that coverage on the stock with a neutral rating and a target price of 130. Now, the brokerage is expecting a lower utilization at key hospitals and a slower offtake at SRL Diagnostic. Now, though the operational trends for both the hospital and the diagnostic centers would remain slow, says the brokerage is expecting an improvement in cost controls over the next 1 to 2 years. Now, one more reason why the stock, why the brokerage has a neutral rating on the stock is because it believes that the ongoing open offer and the audit would remain an overhang on the stock. Lastly, it says that the outcome of the ongoing open offer from IHH and the turnaround strategy of the new management would be the two key important monitorables over the next 12 months, says the brokerage. The second note we have is on IGL, where Citi has maintained its buy rating on the stock but has hiked the target price to 365 from 350. Now, according to the brokerage, in its analyst meet, the management sounded confident that the double-digit volume growth would sustain throughout the financial year 2020 on the back of CNG volumes and new PNG customer additions. On the Gurgaon acquisition, it says that it is taking a longer than expected time, but it says that on completion, this acquisition would add a meaningful upside to Citi's estimate, that is around 10 to 13% upside on the EPS front for the Citi estimates. Lastly, it says that the margin comfort would continue to remain for IGL going forward, despite the hike that we have seen in the gas prices, despite the hike that we have seen in the domestic gas prices recently.
Okay. Watch out for these two stocks. Are neutral on Fortis, but reinstating coverage is an important thing. Mishika, Somit, thanks so much for putting those news into perspective. Avinash, not too many big newsmakers. I don't know if you track GPTL, Hathway, and if the results meant something for the stock.
No, I think, Neeraj, we don't cover the stock, but I think clearly some sort of extraordinary, write-downs purely because of the debtors issue has actually impacted the profitability. Our sense is that, with rising competition in the cable space, I think going forward, it's going to be extremely difficult for companies like GTPL to actually scale up operations and actually maintain their profitability level. So I think it's better to keep away. We could see possibly some more, negative headwinds coming probably in the next coming 1 or 2 quarters.
The other big mover on Friday's session, particularly on the index, we saw GAIL really shooting up, about 4.1% higher in Friday's trade, 356. Again, within the oil and gas pack, remember, you don't see such kind of moves on a regular basis. So when they happen, you probably want to know what's brewing out there. Avinash, GAIL.
I think within the natural gas and pipeline space, GAIL definitely stands out. I think clearly I would believe that FY20 should be a much better year for them, considering the fact that expansion in pipeline as well as the kind of improvement in yields should lead to a better improvement in profitability. But the entire natural gas space, I think, looks pretty interesting. I think amongst that, possibly MGL as well as IGL also stands out. But overall, I think this is a space which can possibly be, accumulated on every decline.
All right, that's GAIL for you. Last 3 months, the stock's been up about 10-odd%. Maruti Suzuki, and what a run we've seen in the auto stocks, which have seen a great comeback. And it's not just Maruti, it's even Eicher Motors, which is now past 21,300. Hero MotoCorp, which has been moving steadily above its 52-week lows on a consistent basis over the last 6 trading sessions, at 26.39 now. So we're seeing a comeback of the autos, but no material change on ground. But the stocks, probably because they appealed on the back of prices being cheap, valuations coming off. Could that be the reason why we're seeing this pickup? No,
I think most of these auto names are, interconnected with consumption themes, and I think I would believe that, stocks like Eicher Motors or for that reason Maruti, I think clearly if you look at the longer term trend, both these companies have always bounced back whenever there has been a crisis. So I believe that the markets are, looking at some sort of bounce back, hopefully once the volumes recover. But from a near term perspective, at least, the next 1 or 2 quarters could be challenging unless we see the industry moving in double digits. It's going to be a bit tough, although inventory in the system is now easing out. I would believe that investors are probably looking at numbers beyond FY20. I think clearly that would be a year when possibly these companies could actually bounce back strongly.
Okay, let's bring in one of our technical experts as well. We'll be joining us in just a few moments. Brijesh Bhatia, head of research at Dealmoney Securities, is here with us on the show. Brijesh, good to have you this morning. Let's talk about the Nifty. Last week was slightly more tepid. No big change for the week. This week itself has just 3 trading days, so you're not going to expect any big bang moves considering how the setup is at least. But what's your call on the Nifty and the Bank Nifty?
Yeah, good morning. So you clearly pointed that Nifty has been trading in a range. If I just look at the time series historically as well, so Nifty has a tendency to move into a range of around 11 to 13 days of range. So if you look at the current scenario, we are being into the 9th day now, and I think more couple of days of trading session. This is a truncated week, 3 trading sessions, and Thursday being the expiry. One can look for a short strangle because I think still more couple of days markets might trade in a range between 11,550, 11,750, and probably next week we might break out towards 12,000 levels again. But for this week, I think one can look for a short strangle of 18th expiry between 11,750 call and 11,550 put, which is currently quoting at around 40 to 43 rupees. One can short that, keeping a stop loss of 58 rupees, and look for a 15 to 10 rupees targets on net spread on the downside for this week.
Okay, that's on the indices. Let's take a look at some stock ideas, individual counters like Divi's Lab and Kotak Mahindra Bank is what you're liking.
So if you look at the Divi's Lab, it is being consolidating around 9 days and 21 days average. And in the Friday session, we have seen some good momentum coming up, and weekly close has been very, very strong at the near the high levels. So I think one can look for a long for 1 week, 1 to 2 week trade at 1730.32, keeping a target of around 1839 on the upside, and stop loss could be placed at 1682. Coming on to the Kotak, so if you look at the Kotak, we have seen strong comeback around 1350, and stock has been slightly consolidating. But if you look at the last week momentum, banks has been again gaining a strong momentum. HDFC is back after a block to around 2265. Kotak has gained a momentum, giving a strong volume breakout of the triangle pattern. And if you look at the rally with the triangle, it is being forming a pennant bullish pattern. So I think one can go long at around 1343, looking at the target of around 1400 on the upside, and stop loss would be around 1350, and this could be around 1 to 2 weeks trade.
Okay. Ruchit Jain, he's joining in as well. He's a technical analyst at Angel Broking. Ruchit, good morning to you. Like Brijesh said, it's a period of consolidation on the index, and most of the conversations that we've been having suggest that it's more profitable rather, or prudent, to take stock-specific trades rather than a trade on the index itself. What would your view be?
Yes, hi, very good morning to everyone. Definitely we have seen a week of consolidation during last week, but that was majorly because of the divergence which we had seen when the index had hit a high of around 11,730. But now we believe that no, it's not far that we would see resumption of the high degree uptrend, because that high top high bottom structure which we have been seeing since the first week of March is still intact. Secondly, if we look at the recent lows of index of 11,550 in Nifty, and the recent low even in the Bank Nifty index, which was around 29,640, both these levels are very crucial support zones. On the Bank Nifty front, this last week's low marks around the 20 days exponential moving average, which is usually considered as a good support during an uptrend. So I think because of the favorable risk reward ratio on this dip, one can look to create fresh long positions over here. That's why I have selected the call option, but that too at the money call option of around 11,650 could be bought at current levels, which is quoting around 62 rupees, keeping stop loss below 26, expecting target around 125. Even on the Nifty front, if we look at Friday's session, during second half, we have seen a good recovery in which 11,700 call options have started seeing some unwinding. So if we move further higher towards 11,700 today, then we might see some good short covering in this call option, which could lead to some good momentum, although we have a truncated week then too. Hence, I am recommending to buy at the money call option at current levels.
Okay. Ruchit, what about specific stocks? What are you recommending today?
So auto space had seen a good momentum in last couple of trading sessions in spite of the broader markets in a consolidation space. Escorts is my first pick within the auto space. The stock price have formed this high top high bottom structure, and after retracing about 38.2% of previous up move, the stock price have given a breakout on Friday on the hourly charts from its consolidation phase. So I think the next leg of rally in escorts should be seen in this week. So at current levels, from a trading perspective, one can go long on escorts, keeping a stop loss, keeping a stop below 765, expecting short-term target of 825. And one of the mid-cap names is MT Educare, which have been witnessing very good volume since last few weeks. Now, if I look at a bit longer term chart, then the stock seem to be forming a rounding bottom kind of pattern, and the target projections of which are coming in the range of 95 to 100. Now, what is good about this stock is the volumes that we have seen during the first week of April. The up move has been supported by very good volumes. Last few days prices have consolidated. So I think once the momentum readings cool off, then this stock could show another leg of up move to complete that rounding bottom pattern. So at current levels, keeping stop below 72, one can go long on MT Educare with target around 96. But also I would recommend to keep a horizon of at least around 1 month's time frame for this pattern to get completed.
Okay, we'll watch out. A couple of buy calls from Ruchit in the session today as well. So interesting, and watch out for escorts. I must say, autos had a bit of a decent run the whole of last week. It was the best performing index on a weekly basis the week gone by, while the last 1 month may have been okay for escorts, but the Nifty Auto Index, a recovery that we've seen, and particularly last week was very strong. Metals very weak, autos very strong. So that's the nature of the movement the whole of last week. Let's see if they continue to do well in the session or in the sessions for this week as well or no. The 7-day chart would have been more appropriate. Avinash, would you bet on any of the auto names from an investment perspective? Let's keep in mind that I don't think anybody quite knows whether this correction that we saw is a shallow one or a deep one, and whether this will be it or could there be some more pain in the quarters to come.
I think Neeraj, within the auto space, I think Bajaj Auto looks interesting. I think, if you look at the March numbers compared to the other players, the volume growth has been extremely strong. And I think this company has been quite unique because a large percentage of its, volumes actually is exported. So to a large extent, the domestic downturn is not going to impact them very badly. And clearly in the coming year, the management is very hopeful that the two-wheeler market could possibly pick up and move into 8 to 10% kind of double digits. They also have the quarterly cycle, which probably could possibly give them some sort of a volume boost. So I would believe that at these levels one would definitely find Bajaj Auto interesting, and I think we could see a good amount of outperformance considering that last year was not a good year for them, but probably FY20 should be a lot better.
Okay. Watch out 3008. It certainly has been doing well. There are these chalk and cheese movements that we see. We won't be talking about it day before yesterday as well, that while the auto index may not have done all that well, Tata Motors has done reasonably well, Ashok Leyland has been climbing, and surprise, surprise, Bajaj Auto is northwards of 3,000. So
yeah, and Maruti from 6,400 is back to 7,300. I mean, that's
that too.
I mean, to think about it, that's a big trading play as well. I mean, not just the fact that we have few of our fundamental experts saying that probably that's not the right time to enter a Maruti, but from a trading horizon, how many other occasions Maruti has given this sort of a move? It's been pretty set in terms of the downside being around 63, 6,400 and the upside capping it at about 73, 7,400.
Yeah, actually, if you look at the last 6-month chart or the 1-year chart or thereabouts, I think when the NBFC crisis broke and all of that, Maruti went down there. That's the chart. I think in the month of February, in the month of April, and way back, it's had 3 times wherein Maruti is held steadfastly at that 6,400, 6,500 mark. So seems to be a bottom of sorts that Maruti is creating for itself.
Yeah, and as long as it doesn't break that on the downside, probably you're pretty okay with it. So Ruchit, actually, let me come to you with this one. Maruti around 6,300. It's got 3 or 4 touch points in the recent past where it's managed to hold the bottom and not break it. What happens from here?
So same zone around 6,300, 6,400. There were many instances in the past as well where the stock has acted, taken a support. Secondly, that was also the weekly 200-day moving average. And the good thing in this up move, since we have seen 3 attempts of pullback from from that 6300 level. But during this up move, the up move now has been supported by increasing volume. So that's a positive sign. And usually whenever we see stock forming a support base and the up move then showing an increasing volume, that's a sign of accumulation, which usually is positive for medium to long term. Now, as far as short-term targets are concerned, I think the stock would approach its 200-day moving average now, which is placed around 7700, 7750 kind of range. So even at current levels, I think if one is looking from a short-term perspective, then the stock is a buy with stop loss below 7000, expecting target around 7700, which would be its 200 DMA target.
Okay. From a quarter earnings perspective now, Q4, this week is going to be big. We're going to see some more big numbers coming out. Reliance Industries for one, Wipro is the other IT name that's going to come out. Anything that you're going to be specifically watching out for?
No, I think clearly, both the IT majors have come out with numbers. So I think clearly, big numbers, especially from the capital goods space, Divina, could be interesting. I think companies like Cummins, our sense is that possibly we could see a slightly better set of numbers compared to the previous quarter. And I think clearly this is one space where we have been quite positive. Our sense is that the coming financial year hopefully should be a good recovery year for most of the capital goods players. I think clearly within the autos, I think most of the stocks have more or less discounted a bad Q4 number. I would believe that the markets are probably looking at what sort of outlook these managements talk about for the first quarter of FY20, because that is where most of the analysts would actually be penning down their new earnings estimates. But overall, I think it's going to be a dry quarter for the June quarter. And beyond June, hopefully we could see recovery coming in, for most of the four-wheeler and the two-wheeler majors.
Few names that did well in the broader market space in Friday's session. Slightly more sketchy names, but you got like an 8K Mines, which was up 10%. You had a Quality up 10%. PC Jewelers was up 16%. And Rain Industries, that one saw a big move. It was the last half an hour of trade. Brijesh, Rain Industries at 130. Would you be a buyer?
Definitely for a purely from a momentum based, if you see the chart swing after consolidating for quite some time between 110 and 85, 89 on the downside. And if you look at the volumes, were very, very strong apart from the consolidation. Look at the volumes in the Friday session. They were very huge, engulfing all the last 3 months of volume. So I think yes, one can look for back to targets around 138 to 142 on the upside. And I think stock might come to retest around 120 to 23 levels, which was the previous resistance zone. Now turns out to be a very support. So I think around 120 to 25, one can look for long bets for the target of 140, 42 on the upside, keeping a stop loss of 110 on the downside.
Well, Rain Industries certainly on an uptrend the last few days, not just Friday's session, but Friday's trade. Devina is right, had a big bang move, 18% higher. I was wanting to ask you, Avinash, if you track Rain, and what's led to this rebound in this stock, which was completely beaten down the last 6 months?
No, in fact, Neeraj, interestingly, in the last 2 to 3 days, the company has released its December 2018 annual report. And I think they have been extremely positive on the electric vehicle market. Their sense is that possibly in the next 1 to 2 years, there could be a lot of incremental demand coming in for the company's products from this particular segment. So I think clearly, my sense is, I think reading between the lines, the markets are probably looking at some sort of incremental upside coming in from this new vertical. Although it's too early to take a call as to what kind of business opportunity would be here. But I think prices have bottomed out for CPC, and hopefully, if prices bottom out and they are able to manage their working capital better, we could see a better Q1 and Q2. And I think the markets are probably signaling that most of the price erosion in CPC has already happened.
Wow. So fundamentally, you reckon that even at 130, based on their annual report takeaways and your belief about CPC prices, it might be a good idea to log into Rain Industries?
I think, Neeraj, from the higher levels, it's corrected quite significantly. And I think in terms of the capacity, they are probably the 7th largest in the world. They have a large amount of foreign debt on the balance sheet. But if you look at the business model, they are a large player to most of the global aluminum companies, even the domestic metal companies. So I would believe that, yes, these levels are definitely attractive if one takes a slightly longer term view. And hopefully, if the CPC price decline is over, then we could possibly see a kind of good bounce back, maybe from the second half of FY20.
Okay. SL Propack is the other one. Last 7 days, the stock's been up about 12-13%, I think. The last 1 month's up 8%. But on Friday's session, on the back of getting some money back with regards to an corporate deposit of 96 crores. I think the stock did what it did. Would you be a buyer, SR Propack?
I think clearly, the business they win is doing pretty well. They are a quasi FMCG player, and I think clearly, considering the kind of news flow we have seen on the news on the Z, front, I think that has been the key reason the stock has underperformed. But I think if one were to take a longer-term view on the business, definitely at these levels, considering the kind of companies it caters to and the segment it caters, I would believe that yes, there could be good value provided the investor is willing enough to give some more time here.
The management was pretty optimistic about growth prospects as well when we chatted with the management on Friday's session.
Yeah, and he said that the last bit of corporate governance concerns that may have existed on the company has now been done away with as a result of this move. That was
it was just about this 96 crores and that's it. They're done with it. There's nothing more left to it. So that's SR Propack for you. About 57 seconds left to go for market pre-open. And we get in our trading call as well from our technical experts on SR Propack, but we'll have to keep it with the pre-open prices, which should come up in just a few seconds. But going across to Asia, Asia as a pack is looking okay, but SGX Nifty individually is not really doing a whole lot much. So Nikkei 225, Shanghai, Hang Seng are all trading above 1% apiece. SGX Nifty, not so much. So it's a flat move this morning. In fact, it's slightly negative, down about 7 odd points. Going to watch out for the currency as well. Saw some bit of depreciation on Friday. By the time closed, 69.18 is where the rupee shut shop. So going to watch out for how it opens this morning. Keeping in mind also the kind of numbers we posted in terms of inflation and the IIP numbers. Watch out for those big movers that happened on Friday on the index particularly. So you had GAIL, ITC, these were the kind of gains that came in. GAIL was up 4%, ITC was up I think about 3%. Whether they do an encore with that, we'll wait and watch. That's the pre-open ticks up on your screen. Nifty opening positive, about 0.5% for the Sensex, a third of a percent higher this morning. TCS, that's a big one. TCS and Infosys, both of these names are going to be closely watched out for. TCS is up about 5%. I do not spot Infosys in the top gainers. In fact, it is amongst the losers. So it's following suit with what the ADR did and the lowering of the margin guidance from 21 to 23%. That's down about 1%. But it's not a very steep reaction to Infosys either. Bharti Airtel is up about 5%. But these are just initial prices. They will cool off. TCS is also down now, 3.5%. Coal India, 1.5% higher. Power Grid, IOC is up 1%. Wipro, HDFC Limited, Tata Steel, Indiabulls Housing, and Yes Bank continues to do well. That's at 269, and ITC up closer to 0.5%. The currency strengthens a bit this morning, so 69.06 is where you've got the currency at.
Yeah, two stocks very volatile and therefore difficult to see what could happen to them. But just to mark them because they're the ones in news, Adani Power and Jet Airways. And let's just see what's happening to them. Very, very volatile, must say. So don't just look at the pre-open rates and believe this is what will happen. Let's see. Adani Power may not be a 10% uptick, and Jet Airways may not have a 10% downtake. In the green now, the first rate was a 10% downtick on Jet Airways. So let's give these rates a chance to stabilize and then talk more about them. I must mention though, CLS has come out with a note on Adani Power. They believe that while this is the biggest regulatory victory led by the Gujarat government's policy support and the new IPP-friendly regulatory team at CERC, they are maintaining their sell rating on elevated leverage and the expensive valuations after the 51% stock run-up. So keep that at the back of your mind. Avinash, of course, believed that some bit of an uptick is in the price, not entirely. Let's see if the stock opens up higher, and whether it is a 10% uptick or a 4% uptick, we'll get to know about it in a few moments. But there could be some upsides to this one in today's session as well. The momentum is certainly positive. Speaking of momentum, what about the stock price on the technical side, Brijesh? Adani Power, a decent move in Friday's trade too. Let's work with an assumption that it starts off slightly higher today. Would you go out and initiate any trades on Adani Power?
Yeah, definitely, Neeraj. I think if has a point of view of 1.5 year, I think this is a good stock. We have seen a long range of consolidation. So if we look at the stock, if it means slightly resisting around 60 levels, and if you look at the 10% upside, it would be around 58 or 57 or 58 rupees opening. And if it managed to close above 60 rupees, it's moving out of its range of last 4-5 years. So I think definitely a big mover can be seen. I'm expecting around 120 on the upside in 1 year's time frame, and if we look at the 2 to 3 years time frame, I think 220, 240 could be the levels that power can show in 2 to 3 years.
Well, that would be quite something if the stock manages to do that. Let's wait and watch if it does do that or no. The other one, of course, as we said, stocks which have had a really good run the last few days. Friday's mover, foods and inns, and let's see what that small cap stock. Maybe pre-open rates will not be that active. Okay, I stand corrected, they are active. For now, looks like it'll start off in the green. Let's see if that is indeed another 17% up more, or maybe slightly lesser. Because in Friday's trade, the stock was up 20% after having run up already in quite a bit in that build up to that announcement, and then another 20%. So let's wait and watch what happens to foods and inns. And Devin already spoke about SL Pro Pack. That's the other one that you should monitor. Just a quick chart perspective out here, Ruchit. SL Pro Pack, another 1%. It's had 2 good days already. How much more?
So before this move that we have seen on Thursday and Friday, the stock prices have seen a consolidation phase in the range of 105 to 120. Now, this last couple of days, the up move has led to a breakout from a falling trendline resistance, and the good thing is that the Friday's up move was supported by good volumes as well. So I think the stock would head higher towards 140, 145 kind of range in near term. So one can look to trade this from a positive perspective for targets around 140 to 145.
Okay, that's SL Pro Pack at 130 pre-open, following the last 2 days' big gains. Is indicating a 1% uptick. We'll talk about more stocks in just a few moments, but HDFC Mutual Fund has increased stake in PSU banks in the month of March, while it cut stake in certain other public sector units. Yash Upadhyay is here to take us through the changes in the portfolio. Yash.
That's right, Devina. So they have basically bought into the financials and banking names, whereas they have reduced their holding in the gas names. So let's first take a look at which are the companies wherein they have increased their stakes substantially. And the names that would feature in the list as the likes of Bank of Baroda, nearly 2 crore shares were bought in the month of March. Oriental Bank of Commerce, 79 lakh shares bought there, as well as Federal Bank, wherein 36 lakh shares were bought. Along with that, BHEL and DLF are the other 2 names wherein they have bought anywhere between 52 lakhs to almost over 1 crore shares when it comes to BHEL as well. On the other hand, like I was saying, they have reduced their holding in the gas and the power names. So GAIL has seen about 65 lakh shares being sold, Petronet LNG about 29 lakh shares, Power Grid has seen 43 lakh shares being sold, along with JSW Steel and REC being the other key names wherein they have been selling more than 28 lakh shares in each of them. But it has been a very busy month in terms of buying, as they have also picked up stakes in a lot of new companies. So let's take a look at the new buys and the ones that go out completely from their portfolio. In terms of the new buys, well, they have bought into Coal India, so about 7.31 crore shares bought there, along with Chambal Fertilizer, KEC International, Exide and Praj Industries, all of whom have seen buying in excess of 1.5 crore shares. Praj Industries clearly stands out there. And the stocks which completely move out of their portfolio, they include the likes of Spencer's Retail, Matrimony.com, wherein they have sold anywhere between 37 to 20 lakh shares, Astra Microwave, Reliance Capital and Bharat Forge, all of whom have also seen selling. Astra Microwave about 11 lakh shares, Reliance Capital about 4.5 lakh shares sold there as well.
Okay, Yash, thanks very much for that. So that is what HDFC Mutual Fund has done in terms of rejigging its portfolio in the month of March. Avinash, between the public and the private sector banks now, I mean, we are seeing a material shift, and it's been the case. They have been favored as private sector banks up until now. PSU banks, even though valuations are attractive enough, there are no takers even at those low prices.
No, I think clearly private sector banks still would continue, to be within the favored basket. I think clearly, corporate banks like ICICI Bank, Axis Bank definitely are worth a second look on every decline. But within the PSU banks, I think something like a Bank of Baroda, I think most of the asset quality issues have now been provided for, and hopefully after the merger, the bank becomes a bigger bank. So I would believe that after SBI, maybe Bank of Baroda within the larger bank space within the PSU pack could be considered, but clearly from a long-term perspective, I think maybe in the near term we could see a little bit of pain on the asset quality issues. But overall, I think the private sector bank space, the corporate lending bank space should be a kind of portfolio kind of pick for most of the investors. I think Axis Bank and ICICI Bank both look pretty attractive.
Oh, let's wait and watch what happens. The belief, as Avinash rightly said also, is that the earnings picture or the earnings trajectory for all of these corporate facing banks could be materially different in the next 5 quarters compared to what's been in the past. But as the pre-open had settled down, the top loser seems to be Infosys. Ruchit, quick thoughts here, 3% lower. Excuse me.
So I think post this gap down opening, what there is a follow-up move is that would be very important, because recently the stock has formed a double top pattern around 770. Second week of Feb, price is corrected from 770, and even during last week the stock has shown a correction from 771 levels. So I think if we open about 3% gap down and there is no follow-up buying from there on, then the stock could head lower towards 700 kind of levels in near term. So avoid any kind of bottom fishing over here, because we have already seen a double top around 770. I think one should let the prices to correct further up to 700 kind of range.
I think we'll be interested to see what happens to Infosys and TCS after this open today. TCS trades at about 20-21 times current year earnings?
Yeah, around 90 to 20 times.
Around 90 to 20. And Infosys at a shade discount, maybe a cup to maybe 18%,
yeah,
18 times.
Yeah, 18 times.
18 times. So, Avinash, with that discount before this move, and now we have a roughly 5% differential move on open. If indeed this is how the stocks start off, Infosys 3% lower, TCS 2.5% lower. At some point of time, you're going to ask that if the growth trajectories look fairly similar and Infosys in this under promising and over delivering stage, would a 3%, 17 times or 17 times versus 20 times or 18 times versus 21 times, whatever your numbers are, would that discount at some point of time narrow, and what would go up, or whether TCS would come down?
No, I think, Neeraj, clearly for the discount to narrow down as far as Infosys is concerned, I think the markets would like to see how the earnings trajectory pans out vis-a-vis TCS. I think clearly I would believe that at least for the next 1 or 2 quarters, with the kind of moment in the rupee, we could find maybe the going a little bit challenging for Infosys. But yes, from a longer term perspective, definitely Infosys has the variables to actually compare, to trade at similar kind of valuations what TCS currently trades. And hopefully, I think this can happen only after the next 1 or 2 quarters. Maybe in the short term, Neeraj, you could probably see some sort of negative, headwinds to this counter.
All right. We will watch out for that. Infosys and TCS both at open, and see whether or not pre-open has probably given a better judge in terms of which direction both these stocks could head. But we're just minutes away from market opening, and we'll tell you all that you need to know to stay ahead and trade today. IT bellwethers, Infosys and TCS met estimates on the revenue front in March quarter. Margins for both companies, though, saw a miss.
Telecom operator Reliance Jio has crossed the 30 crore subscriber mark. It has managed to scale this level within 2.5 years of operations.
At least 6 investors, including Etihad, have expressed early interest in Jet Airways, even as the company extends suspension of its international operations.
In other earnings, GTPL Hathway reports a 15% revenue growth in the 4th quarter, but an exceptional item of 64 crores led to the company reporting a net loss from a profit the last tenure.
APL Apollo Tubes acquires a production unit of Shankara Building Products in Hyderabad for 70 crore rupees. The plant has production capacity of 2 lakh tons per annum.
And Dixon Technologies has acquired 50% stake in mobile phone manufacturer Paget Electronics for 27 crore rupees. Not that Dixon would have moved too much, but Avinash, before I thank you, Shankara Building Products, do you have any thoughts here? It's been beaten down really badly. They are trying to deleverage.
In fact, Neeraj, we could possibly see some interest coming in. Hopefully, in the coming financial year, the deleveraging process is on. But I think clearly the kind of valuations the stock used to enjoy, I think the markets would obviously get some kind of confidence back only when the earnings trajectory comes back. So I think till that time, it's going to remain in a range. I would not be surprised that maybe the first half of FY20 would still continue to be a bit challenging for them.
Okay, we'll leave it at that, Avinash. Thank you so very much for joining us this morning. So Avinash Gorakshakar with his views. Few other stocks buzzing about include Sri Lanka Sugars from the sugar pack that's doing okay in pre-open. And you've got the likes of a Lakshmi Vilas Bank, which is up 2.25%, takes the weekly tally northwards of 5%, but the monthly move has been massive, 41% for Lakshmi Vilas Bank over the last 1 month. Ruchit, would you be a trader in Lakshmi Vilas, or would you be, if you had the stock, you would take profits?
I think it's better if you have the stock, then continue to hold, because we have seen that the stock has recently given a breakout above its 200-day moving average. So I think this could lead the stock higher towards 100 to 105 kind of range. So although the risk reward ratio for fresh trades may not be much favorable, considering the stock would be below 85, but if any existing long positions are there, then I would recommend to continue to hold for target around 100 rupees.
Brijesh, any of the sugar counters worth a trade?
Balrampur Chini, I think stock is strongly outperforming and gaining a good upside momentum above 130. So I think 154 to 160 could be the targets in Balrampur Chini. Maybe it would take some weeks, but still it's not moving below 128, 129. Stay long, add on every dips.
Okay, stay long and add on dips in Balrampur Chini. 1 minute left to go for market opening, so I want to quickly go ahead and take those top trading ideas from both our technical experts, Ruchit and Brijesh. Ruchit, I'll come to you first. What's your top call for the day?
So we had some good momentum in auto space, and the pre-opening levels are indicating a continuation of that positive move in many of the auto names. So I would stick with the call that I've given in the morning as well, which is on Escorts. The stock is indicating a mild gap up opening today. So one can go long even at opening levels for target around 825 in next few trading sessions.
Okay. Brijesh?
Apart from Kotak and Divis we discussed, one can look for long bet on sales. So if you look at the last momentum, it's gaining good support at around 56 rupees, and we have seen back to 57 rupees. So one can look for short-term long around 57, keeping a stop loss of 55.8 and a target of around 60-61 on the upside.
Okay, Jain, stay on. We'll take in opening thoughts. Of course, Pankaj Murarka will be joining us as well in moments from now, but very close to market open. So let's try and focus on that. We'll start off marginally in the green. The question is, can we build down from there or no? But here are the first rates. Flat for the benchmark indices. You would probably suspect that volumes in this truncated week would be very thin too. But nevertheless, it's a flattish start that we have. What about the mid caps and the small caps? Should come up on your screen. I would reckon that they would have a flattish start too. Near flattish, maybe 0.25% in the green for both the indices. In fact, the mid cap index 0.33%. But let's wait and watch if this builds up or does this even out as well. Heat map, focus on specific stocks because the index isn't doing too much, not too many losers, but for Infosys, well, this stands out really. 4.5% down for Infosys. So what the ADI was showing turns out to be true and more. For now, it's a steep gash, and TCS up 3%. So the differential between the valuations only gets wider. I'll be interested in seeing at some point of time this narrow down and what leads to that narrowing down or no. Coal India about 1.5%. Tata Motors continues from where it left off. It's been one of the strongest stocks in the last 2 weeks, I must add, on the index at large, not just in the auto space, but continues to rise and shine. All marketing companies seem to be having a good start, at least IOC is. And with TCS, you also have Tech Mahindra, which is marginally in the green. Don't quite see Wipro or HCL Tech amongst the top gainers, but we'll spot them. Essentially, it's TCS and Infosys, the dichotomy in the moves for both of these stocks, which stands out in the session today. What about specific other stocks, non-index, which should be in focus? Well, Adani Power, and let's see how that is starting off in the session today. Had a fairly decent Friday's trade, big uptick in late trade. For now, about 1.5% lower. So maybe the gains are in the price. We'll have an extended discussion about this implications of the move, maybe with Pankaj Murarka and with Pramod Deo as well. Others, some stocks that were active in Friday's trade, and let's pull them out. Rain Industries continues to rise and shine, another 7%. Foods and Inns, small cap, micro cap stock in which did have investments picked up. Stake was up 20% in Friday's trade and up another 13% right now. SL Propack, however, takes a bit of a breather. Devina, what are you spotting?
Well, aside from the ones that you already mentioned, few stocks that were up and about in Friday's sessions included the likes of a PC Jewelers, which has continued its move in today's session as well. It's up about 4%. Following that, Sri Renuka Sugars is up about 2.5%. Hathway is up 2.5%. You've got Tech Solutions, Indiabulls Real Estate, JP Power, Wellspred Corp, that's up 2.5%. ITI, Wockhardt Pharma, as well as Tata Motors DVR, which is up closer to 2% in the session. The overall mood of the market in the broader market space is slightly more positive. So 855 stocks have advanced versus about 261 stocks which are trading in the red.
Okay, just taking opening thoughts from our experts as well. Remember, Infosys starts out 4% lower and TCS starts off 2.5%, but the strongest mover is Tata Motors. Opening thoughts from Pankaj Murarka, then we'll get in our technical experts for their opening comments as well. But Pankaj, thanks so much for taking the time out and joining us. Difficult to comment on what the markets would do, so we'll probably try and avoid that. But let's work with an assumption that you're selectively looking at spaces to look at. What did you make of the commentary that's come in from the two IT biggies? And does that paint a picture for the space at large, or do you think it's now very bottoms up when it comes to the IT space as well?
Well, it is bottoms up to some extent because different companies have different strategies and different portfolios. But I think the one common thread is that IT spends globally remain pretty robust. Yeah, if you look at TCS numbers, meaning the one comment that clearly came out was one economy which is in the midst of a big turmoil is UK because of Brexit and so on and so forth. Yet they've had a very strong growth in their UK market business. So I think IT spend across the board remain pretty robust, and there is a significant acceleration in digital spends. The diversion or the difference in results between the two companies is because Infosys is still in transition. They've had a new CEO 6 quarters back, and they have a transition plan for their business to transition business to a much more stable and a higher growth trajectory. And as a result, they are making, or they've been making significant investments in the business. So it's a company which is still in a transition, and it will take another 3 or 4 quarters before the results of transition starts showing. But I think the one common thread is that the IT spend still remain pretty robust.
Okay, and would you reckon that that would probably translate into selectively, of course we can't paint the whole sector, but you reckon that you will have mid-size or large-size IT companies during the course of the quarter and maybe the next couple of quarters come out and deliver growth which would please the street?
I think so. You look at TCS numbers, right? They're $20 billion revenue and they're still growing at 12%. So they're adding $2.5 billion every year in terms of incremental revenue. That's meaning you take a bunch of mid-cap IT companies taken together will do that kind of revenue on a full year basis. I'm saying even on that base, and obviously look at globally, Accenture is $40 billion of revenue and they still continue to grow at 8-9%. So they're adding $3 or $4 billion of revenues still on that base. So I think you look at the large cap IT companies, they still have a huge runway to growth. And I think there is obviously a pocket of opportunity with some of the mid-cap IT companies who have got the right kind of portfolios and who are rightly positioned probably to deliver growth which can be much higher than the large cap companies.
Do you see HCL Tech, being the flag bearer in the industry right now, particularly from the large cap pocket? The stock has moved up quite smartly in the recent
So there are a couple of companies who are doing much stronger growth and probably will continue to do so at least for the next few quarters. HCL Tech is one of them. L&T Infotech is another one, and the Mindtree is another one. They've been very smartly positioned their portfolios, and in terms of whatever visibility that exists, I think these companies will do a growth which will be much higher than the industry growth.
It's showing in a way the stocks are definitely doing well. Opening thoughts before we thank you, gentlemen, Brijesh as well as Ruchit. The indices are not doing too much, maybe the Nifty Bank 0.25% higher. Anything that stands out for you? If you have a comment on the IT names, then even that's welcome. Brijesh, let's start off with you.
I think I would stay long on Wipro because stock is moving out of a strong range, and we have seen good volumes coming up between 275 to 280 80 sort of levels, and stock is sustaining above those levels. I think impact of Infosys and TCS might not hurt Wipro much technically. I think 310, 315 could be the level I'm eyeing on Wipro on the upside. So every dip around 278, 79 could be a good accumulation level for me on Wipro.
Okay. What about you, Ruchit? Anything that stands out for you on open?
So, overall, if I first look at the market breadth since opening, then the market breadth is clearly in favor of advances. So, this is a positive sign. And amongst the sectoral indices, metals, although last week had shown some correction, but today the opening seems to be quite good. The Nifty Metal Index is up by around 1.25%, and which is a pullback move from its 20-day moving average. So I think today, from a day perspective, or maybe next 1 or 2 day perspective, some of the metal names would be in momentum. Tata Steel has a harmonic pattern, so we might see some outperformance from the metal space.
Okay, Jain, both of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time.
Thanks very much.
Well, let's continue our conversation with Pankaj Murarka. What's happened to autos at large, and what's happened to the CV players? Tata Motors is leading the pack. Ashok Leyland is not far behind. It almost seems, there are two possibilities. Either that they were punished too heavily for the street's liking and therefore some bottom-up buying might be happening, or that the street believes that the pain for the auto space might be short-lived, though I don't know how easy it is to predict that.
The domestic auto is going through a cyclical slowdown that we've been seeing since November because of multiple factors, including rising fuel prices. There's been increase in price of vehicles because of your insurance and other things, and so on and so forth. And we've seen some degree of slowdown in the rural consumption or buying, and that has also had a rub-off effect, on the aggregate this thing. Tata Motors is a slightly different case. If you look at Tata Motors, at the bottom where it was, the stock at 150 rupees. If you try to look at, obviously they have different parts of business. There is JLR, there is this commercial vehicle, there is domestic passenger vehicles, and there are a bunch of subsidiaries. But on an aggregate, if you look at it, this company does a revenue of something like about $25-26 billion. And at the bottom price at 150 rupees, the stock was at about $6 billion of market cap. So which effectively was, if you look at the revenue to market cap, it was like under 20%. I haven't for a very long time seen a large cap company where you have a market cap to revenue ratio of 20%, which effectively was a signal that there's a deep value into the business. Obviously, there are parts of business which are doing well, and there are parts of business which are not doing well, which is why the stock was so beaten down. But as a general rule of thumb, I've seen in my investing experience, if you can buy into a mid cap at anything like 0.5 to 0.8 times revenue, and the market cap is somewhere in that range, and if it's a decent business, over a period of time you tend to do well. And here is a large cap which is available at market cap which is 20% of the revenue. So if the businesses start falling in place, or the pieces of business which are not doing so well, if they start doing well, I think the catch-up in valuations of for this stock over the next couple of years could be very significant. So I think I need to make a disclosure. Obviously, all the stocks I'm talking about, we could be interested.
Standard. These are not investment advices by any stretch of imagination, more a view on businesses per se. But Pankaj, just wondering, and just that rule of thumb, do you reckon that, for example, at Tata Motors, if it was at 0.2, I haven't looked at the numbers, but I'll go with your calculations. Even after the move, it wouldn't be too expensive compared to what some of the other companies do in your experience when they move up from revenue to market cap ratios. But businesses need to fall into place, right? How easy or difficult is it to predict what a behemoth like Tata Motors could do, more importantly on the JLR front?
Yeah, so there are multiple things which have gone wrong with the JLR piece of business. Last year was a perfect storm where the Murphy's Law really played out with them. Everything that could have possibly gone wrong did go wrong with each and every part of their business. It's again an organization which is in transition because they have put a restructuring plan and they've been working on it on multiple fronts, including trying to drive sales, working on the launching new vehicles, including the EV vehicles, and at the same time trying to cut costs very sharply, including taking people out and costs of the system. Let's see how that plan plays out. If it does play out as per what the management is guiding for, then the upside can be very significant. The point I'm trying to make is when you get a large cap company which is at where the market cap is 20% of revenues, that's one clear indicator to me that that's a distress sell, or that's how market is pricing that stock. Meaning if I run my screeners, I couldn't find too many mid caps which will be available at 25-30%, where the market cap is 25-30% to revenues. Forget about a large cap. And you have a large cap here with a very dominant piece of business in India in the domestic CV piece, with whatever 50% market share. They are a dominant player in the domestic CV space. So there are pieces of business which are doing well, and obviously there are pieces of business which they need to fix. But it was clearly a distress sell in terms of where the market was pricing the stock. So when stocks, and my experience in investing has been, when stocks do get priced or beaten by the market to such an extreme extent, and if after that the performance improves, then they come back very sharply. The mean reversion is very violent or very sharp. I think we're seeing initial signs of that.
You think what unfolded for Tata Motors is something that's happening to Jet Airways now? Or that's a completely different ball game?
I think they are two different ball games. That's an industry where the dynamics are very different. It's a company which is significantly over-levered and it needs significant capital infusion. So I think the dynamics are completely different. Having said that, I think it has a good brand equity, but here now you need one significant capital infusion, and you need let's see who the new management is and what their strategy is, because depending on who takes over, the strategy for running the business can be very different if it's owned by a foreign airline versus it's owned by a bunch of PE guys or domestic guys, in terms of how they want to really build the business. Though I think the overall sector is very attractive. If you see last 5 years, we have doubled the number of people flying in India has really doubled. So that's a pretty robust growth, and we're still scratching surface in terms of potential, because still only hardly about 15% Indians fly. So the potential is significant.
So that's a space you'll watch out for. The other one that from an earnings perspective looks like it could see pressure points in Q4 is the telecom space. Whether you talk about what Jio does, whether you talk about what Bharti does, Vodafone Idea, I mean, they've got their rights issue going, but what happens to the business?
I think again, if you look at the sector, it's a pretty interesting sector. 8 quarters back, we had 10 telecom companies in India. We're left with only 3. So it's a sector which has undergone massive consolidation. And obviously there's a shift in the pecking order in terms of the standing. So clearly Jio coming from all the way nowhere, now aspiring to wanting to number 1, they're already number 2 player. But the fact remains now that if you look at the whole space, our views over the next 20 years, we don't see any new telecom company coming in India, which effectively means, and if data consumption at the same time over the last 8 quarters has grown exponentially. Average data consumption per user 2 years back used to be like 1.5, 2 GB. Today that number is 8.5 GB. So that's gone 4x in the last 2 years. And that's only going to increase further with more users of, whatever, watching IPLs or the Netflixes of the world that all the smartphone users are using. So now we are in a situation where you have no new competition coming in, and the volume growth is going to be very strong. So I think some point of time these companies will start making money, and they'll start making significant amount of money. So I think the longer term outlook for the sector remains pretty, to our mind, remains pretty positive, though there'll be some short term challenges. But having said that, I think the worst is behind the sector. Incrementally things will improve.
Do you think it's possible for Idea to come back? I mean, that too has been beaten down out of shape. Valuations have come off quite significantly.
So I think this current rights issue they're taking, that should take care of the balance sheet, structuring, getting the right mix between debt and equity for the time being. They need to get back into a lot of efficiencies back, which they're talking about through the merger synergies. And they've been saying that they've been trying to, they'll achieve that much earlier than what they've been targeting. So I think, and now with whatever the combined entity Vodafone Idea will be, though currently if you go by subscriber number, they're the largest player, but they're losing subscribers. So eventually they'll settle as a number 2 or a number 3 player. But I think it will continue to remain as a formidable player. You can't write them off.
Can't write them off. Okay. Even if Reliance were to launch 5G sooner rather than later.
Yeah, I think consolidation in Indian telecom sector is done with. These 3 players are here to stay.
Here to stay.
Yeah, I don't see a risk to survival of any of these players.
Okay. Typically, when people talk about investment themes, you look at the supply side and see what's happened. So I think telecom fits right there, right? No new supply, incremental supply coming in. My follow-up question, not to telecom really, but to the supply side argument would be power. And Friday was a big news for one company, Adani Power, but the sector at large, supply stalled for sure. Demand is picking up. For some states, it's at a low, and if even there is a mean reversion to what, say, Madhya Pradesh would be doing in terms of power consumption, we could probably have all the power capacity right now being utilized to 80-90% utilization too. Is that a space where you would look at from a 3-4 years investment perspective?
Certainly, we're looking at that space. The only gap is, unlike some of the other sectors where the consolidation is over and done with, this is a space where the consolidation is still in the works. So you have still a lot of power projects which are stalled and which are at different stages of resolution. Either they are, either the projects have not been completed, or they are projects which are completed but which don't have the PPAs, or they don't have the fuel supply. And they are projects which are at different stages of completion. So we need to resolve all of these assets in some form or other. Either we need to put them back to productive use, or if they are not worthy of that, then we need to just dissolve those companies and those assets. So I think that whole process is another 4 to 6 quarters in the works before the sector completes the whole consolidation process. So I think that's something which is, and having said that, as you rightly said, the power demand is accelerating, or it's growing, meaning if you see last year winter sometime in November, December, the peak power rates shot to something like 9 rupees, 10 rupees. In the peak hours, which is astronomical, which clearly says that in peak hours, when the demand really spikes, we run short of capacity, and there were significant power cuts or load shedding, as they call, in different states by the discoms, because they couldn't afford to buy power at such a high prices, and they had to resort to load shedding or this thing. So I think the demand supply, meaning in power we had a situation where the supply was far higher than the demand. That gap is closing. And probably in the next 2 or 3 years, I think that probably next 2 years that gap would have completely closed.
Okay, we'll talk about this at length with another guest as well. But Pankaj, take a moment to thank you for joining in today and giving us that perspective. Really appreciate your time.
Thank you so much.
Well, we were on the topic of power on the other side of the break. Remember that big news, Adani Power allowed to rework its tariff agreement with Gujarat government. We talked to former CERC Chairman Pramod Deo to understand some of the caveats of that order. And Deepak Purswani of ICICI Direct will join us to talk about the crackdown on polluting ceramic units in Gujarat and how it's helping the organized tile makers.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Back with IndianOpen right here on Bloomberg Quint. It's been 7 years since the two power producers first appealed for higher tariffs. The Central Electricity Regulatory Commission has given its nod for one of them, Adani Power, to charge more for the power it produces at the Mundra UMPP. The higher tariff was warranted after a sudden spike in the cost of coal, which comes all the way from Indonesia. But Adani Power and Tata Power had promised to sell at a fixed cost for 5 years. Someone who oversaw a lot of the proceedings and was instrumental in framing the regulator's opinion on the matter was Mr. Pramod Deo, the former chairman of CERC. And he joins us right now to tell us what he makes of what appears to be the final order, at least for Adani Power. Mr. Deo, good having you. Thank you so much for taking the time out. What did you make of this order?
Good morning.
And wondering if you would reckon that this would be the final say, or would consumer groups, there is a Pune-based consumer group which is very active against orders of this nature as well. Do you think they will rally and have an impact on what could happen over the course of the next few months?
Well, if you ask me legally, they have a recourse to go to appellate tribunal and later on to Supreme Court. But in this particular case, Gujarat government had made a reference to Supreme Court, and Supreme Court was apprised of the High Power Committee report. I was a member of that High Power Committee report, and the final decision of DISCOMs is based on that report. So in that case, legally, it could be that they can go again to Supreme Court and challenge it directly, need not go to appellate tribunal. That's a matter of some legal interpretation.
Okay.
Because what the Supreme Court had said, that the consumers will be heard by the appropriate commission, and in case of Adani Tata, the appropriate commission is the Central Electricity Regulatory Commission, because these are multi-state projects, whereas the ISA project is only Gujarat state. So the appropriate commission would be Gujarat Electricity Regulatory Commission.
The belief, Mr. Deo, is that because this time around the procurer, the generator and the lender are all of them in agreement, a probability of a stay on CERC's order is relatively low. Would you believe that's a fair assumption? So what happens, you never know, but is that a fair assumption?
You see, we have to remember that Electricity Act tries to balance the interest of all the stakeholders. Now, in this case, who are the stakeholders? Obviously, the investor who has put in the equity. Then you have also the financing institutions. They are the lenders. Then comes the consumers. Now, consumers also, we should not just go by consumer as a one homogeneous group. There are different consumers. If you see the industrial, commercial consumers, they highly cross-subsidize agriculture and also domestic consumers. So in this case, when we talk of this decision, the tariff being increased by amending the PPA, and that provision did exist in the original thing. So in that case, who are affected? Now, if you were to see the industrial, commercial consumers, they will be least affected for the simple reason, for them the option would be that the DISCOMs of Gujarat would have purchased more expensive power, and naturally the more burden will fall on them. Whereas the consumer groups who have been agitating against this in the various fora, they represent a particular constituency. So if you find that the industrial consumers, commercial consumers, their bodies are not somehow being represented adequately at that level. I don't know why it is so, because there are many associations of industrial bodies, but then they are not that active in this matter when it comes to. They are the more like the lobbying groups.
Okay. So, now, which
so
is...
on the balance, I will say that if you talk of the consumer interest...
Please carry on, sir. Please carry on. Please finish your point.
No, if you say the consumer interest is the third, but you have to look at it, what is the consumer interest and which group is benefiting, which group is losing. Obviously, one can always take a stand that whatever happens, but then the projects cannot be operational because already the equity of these investors has been completely wiped out.
Yeah, that was going to be my question, sir, that the argument that the companies had entered into an agreement to supply power at a particular rate was done with the companies coming in with open eyes. So the parties who might litigate against this order might have a fair argument that they need not have done this in the first place. But my question is, now that it had reached this level, and because all three, which is what I said, the procurer, generator and the lender are all in the same boat right now, is this a good order from a lender's perspective as well? Because otherwise the project might, or projects of these nature might have gone to bust, and the lender's stake or the lender's interest in this would not have gotten served as well.
In fact, that's very true because the lenders have taken a haircut of 20 paisa on the fixed cost, and the reason is that otherwise they are going to lose massively, because if these projects stop generating electricity, after all, how are you going to service the loans? And in that case, what do you do with these projects? Because these projects are coastal projects, so you cannot think of using domestic coal, and that is one of the technical issues which was examined by NTPC, and it will be very difficult because the equipment for these power projects is manufactured for particular type of imported coal. So in that case, if we were to substitute these generators by somebody else, that in that case also we have to reckon with the increased price of coal that will be available in international market.
Okay.
So that way only lenders can get the money back.
Okay. Now, being the former head of CERC, Mr. Dev, do you think that the other state electricity boards will do what Gujarat did? Because what Gujarat has done is work for Adani Power. Tata Power is resting on the small mercies of some of the other states as well.
No, the reason is that the Tata Power is supplying to 5 states, whereas in case of Adani it is supplying to only 2 states, and a difference is that the Haryana is the other state, but in Haryana's case, most of the supply for that electricity comes from indigenous mine, so it is share of the imported coal there is very small, and that's why when the Gujarat government took that decision through that government resolution, they have not excluded Tata Power. What they have said, Tata Power should get now similar agreements or resolutions passed by other state governments, and one can understand with the elections on, other states will take their own time. They are not going to do it immediately, whereas Gujarat is suffering immediate shortage, and particularly in the Kutch region, the voltages are also very low. So to have a source in this Kutch region has also technically helped them.
Sure.
And otherwise you will be buying in the market expensive power.
I appreciate that, sir. My question was, what I wonder is, do you think that the other states will also follow suit? It may happen with a bit of a lag, but do you think that will be the nature of the order?
You see, one has to remember that electricity, all practical purposes, is the state subject. So it is in the concurrent list. Central government can only give advice, do certain things. But when it comes to these decisions, it is finally the state government, state chief minister, who would decide these matters. And that has been my experience, having worked both at the state and later on at the center.
Okay. So let's work with an assumption that it's difficult to preempt what states could do. Let me ask you if states are indeed approaching this matter in that way. Have you been approached, sir, by any of the state electricity boards or states to be a part of a committee, suggest some resolution plans?
No, in fact, this committee, that high power committee I was a member of, we had consulted all the states.
Okay.
It's not that we didn't. So if you see the report, consultation has taken place. Question now is that based on that consultation, that report, the action taken by Gujarat government, because after all, under the scheme of the electricity law, it is the DISCOMs who are supposed to be commercial entities. They had to take this decision. State governments can only guide them. There may be a provision to issue them directive, but I don't think the state governments are going to issue directive, but they can always give direction that you should try to get electricity at optimal price, and towards that you can work in this direction. And that's what the Gujarat government has done. So that model is there. It is for the other states whether to follow it or not and to what extent. Because even Gujarat has made some changes to high power committee recommendation to suit their needs.
Okay. My final question, sir. There's a guest who had come before you was talking about how this is broadly an industry question, but the conversation was around the demand supply scenario within power and how no new capacities have really come up in a meaningful way. They probably don't need to because the capacity utilization levels are very low. But during peak times, electricity rates have shot up as per his calculations to highs of maybe 9 rupees or 10 rupees as well per unit. My question is, how do you see what happens to power rates and to supply over the course of the next 12 to 18 odd months? Do you have any thoughts here?
You see, we are going to have issue about this peaking power because we don't have sufficient peaking power capacity, and you cannot really add that peaking power capacity. And there has been induction of green energy, solar and wind on a massive scale, and it is continuing. So to balance that, because those power sources are intermittent, given that you will find that like the evening load, you may have the support from wind only in certain season. It's not that every evening you can get support from wind, and from solar you can't get support in the evening at all. So that being the case, obviously there is a need to add peaking power, and that gets reflected. And right now, increase in the prices, one can understand, no? Because with the elections now on, naturally every state wants to supply better quality power, as much power as they can do, and that decides the market rate. In fact, I remember in 2009, the price had reached 17 rupees. And that's why when it came to the next time there were 5 states going for poll, CERC had come with a ceiling on the price of traded power. And that judgment also was challenged in some high courts and has been upheld. Sure. And we tried to put this ceiling. After that, there was no need. Because in fact, if you see 2014, that was a very different thing. Because the prices did not go very high at all. So I think that's why I always say electricity continues to be a very political creature, no?
It does. Mr. Dev, though, appreciate you taking the time out this morning and talking to us on what's happened. Difficult to, of course, preempt what will happen in the near future, but thanks so much for throwing some light on the order.
Well, thank you.
Well, that's Mr. Pramod Deo, and yes, I know there's no conclusion about what could happen in the times ahead, what the other states could do, whether this will be the end of it or there could be some more reliefs for the other power companies, but it's difficult to bring it out nevertheless in a conversation of this nature. But Mr. Pramod Deo trying his best. Let's wait and watch. Adani Power in today's session is down about 4% in the session today after that big move that happened in Friday's trade. A bit of a pullback that has happened into that stock. 2.5%. Okay, it was down 4% at a point of time. Now down about 2.5%. But the fizz out of stock for the time being. Okay, speaking of regulations, a quick conversation around another sector. The crackdown on polluting ceramic units in Gujarat has left several unorganized tile makers struggling to stay afloat. The order to use natural gas instead of coal is a problem as gas is more expensive. This is hurting costs, leading to price hikes, and that is sweet news to maybe the organized players who've been under severe pricing pressure. In a brokerage note on the sector, ICICI Direct says it expects a strong volume growth for the listed players in Q4. Let's try and talk about this with the analyst behind the report, Deepak Purswani. Deepak, good having you. Thanks much for joining in. What do you expect in Q4? Which companies will stand to benefit the most?
Yeah, good morning. In terms of the volume in Q4, we expect Kajaria's volume should grow close to the 13-14%. And even Somani on the sequential basis should report the better volume. And because of this ban from the NGT on the ceramic players, we expect there should be a incremental volume from Q1 because this has happened in the March. So major impact would be seen in the Q1 next quarter. And at the same time, unorganized players would also take the price hike to the extent of 8 to 10% to compensate for the rising cost because of shifting from to the gas units. And hence, we anticipate that the pricing difference between the organized and unorganized would also shrink, and hence there would be a better volume going ahead for the organized players.
Okay. Your report mentions about not just volumes but pricing looking like picking up as well. What's been the change as a result of all that's happened in the last 3 to 6 odd months? Is there been a sharp impact? What do you expect the next 6 to 12 odd months to look like on the pricing front?
So as I already mentioned, right now the unorganized guys has already taken price hike to the extent of 8 to 10%. This will bridge the gap. At the same time, on the organized front, they had already taken the price hike in the month of November. And going ahead, because of there would be a capacity expansion in the premium product category like GVT and everything. On the blended basis, their realization should improve. At the same time, they should be benefiting from the gas prices. As there has been crude oil has corrected from the peak from 85 to around 70, but this is not reflected in their pricing because of the contracted price they have. This eventually should come down to the tiles player with a lag impact. So if you see their gas prices in Q3, it was close to the 40 rupees per SCM. Now it should close down to, in Q4, it should come down to 38 rupees per SCM. In the coming quarter, it could come down further.
Okay.
Maybe around 35 rupees per SCM.
Okay, so you mentioned that, and you spoke about it briefly, that it will be margin accretive.
That way we are seeing, sorry.
No, sorry, I was just saying, I was taking forward that point that these falling gas prices from Q3 would be margin accretive for your tile, for the companies in your coverage universe. So there has been a price increase, there could be a margin uptick as well that has come in, and it could, another price increase or some pricing action could come in the new financial year as well. Putting all of this into perspective and keeping in mind that Q4 could be showing some interesting earnings trends, which are the companies or which are the top ideas, and why is it that these companies are the best ideas? I believe they are Kajaria and Somani for you.
Yeah. So broadly speaking, in terms of on the sector, we are positive. As I already mentioned, there are the multiple tailwinds which are available for the sectors, and hence there is a possibility of earning upgrade going ahead because of these triggers. In terms of the earnings, we are anticipating Kajaria's earnings should grow at around 28% CAGR during 19 to 21. And we have the buy recommendation on Kajaria with a price target of 690. And we anticipate there are the more triggers for the Somani, as it was also going through the operational disruption few quarters back. Now everything has settled down, and hence the earning growth would be much better. because of the low base of the Somani. So we anticipate their earning would also grow at a 55% CAGR. And we have the buy recommendation on Somani with a price target of 500.
Okay, Deepak, thanks much for taking the time out and explaining your report in a nutshell to us. Appreciate your time. We are out of time completely on this leg of Indian Open. The market's lying flat, but the Nifty Bank is the one which is active, about 30,080, up about 0.5%. IT index would be showing mixed trends because Infosys might be pulling that index a bit lower, and that's why Nifty IT has been kept under check. But TCS, Tech Mahindra and a few others seem to be doing okay. Infosys is a sore spot in the session today. We wrap it on this leg of Indian Open. From all of us who put this show together, thank you so much for watching, but stay tuned. The FNO show takes forward the action on the other side.